Alright guys, we're going to do a little more practice trading. This one's going to be on the 15 minute with Etherium. Let's make sure our volume levels are good here. Probably about there is good. Alright, and we're going to be using a system and I'll explain as it goes. Alright, so this is the 15 minute and we're kind of starting at the beginning of the year here. This year, 24. Just going to go through it candle by candle, see if we get anything interesting. Alright. Nope. What we're mainly looking for right now is breaking out of this. These are the 10 EMAs. High, 10, high, 10 low, and 10 close. We want uptrending volume. We're looking at the last 3 bars. We want a positive oscillator direction. We want the RSI here going in a straight line, crossing out of the top line here for a long, crossing down through the bottom line for a short, and we want this DMI line to be a consistent color for the past 2 candles at least. And then something we're going to see, this is a cross here, and when this changes colors that means these lines have crossed. Basically that's 5 things, and we want to see 4 out of 5 things. Also we want to have the we're risking 0.35 minimum, as in like this candle is 0.16, so that's not big enough. And we want this candle to be touching the middle line here, and we don't want the upper wick to be more than 1/4 of the candle if it's longer than the bottom wick. Alright, so let's just take a look here. Also, we don't want it to have to cross the moving averages here if we're going for a long. And as far as the take profit and the risk and the stop loss, I'll explain when we get one. See, this one, I think the upper wick is too long. Some of the other stuff doesn't make sense either. Alright, so this is not quite touching the middle line. Let's actually measure these wicks. 12. They were the same length. I think the rule, if they're the same length though, is we don't take it, so that wouldn't have been a thing anyway. I would say this is pretty likely to succeed, but it doesn't meet the criteria. And small loss there. Also, I've added these supply and demand ranges. You can see I'm not quite sure what to do with them, but I think generally you don't want price to be in them when you're trying for a trade. Alright, so this looks like a nice solid piece, but the other stuff doesn't make sense. Also, here's another rule. While the oscillator has its first positive direction color, you need stair-stepping volume for that. But if that's not the case, if you're in here, you need medium, low, and high volume. So I would say this has a good chance of succeeding, but I'm not taking it. We got new supply-demand box going. Actually, let's see if that's stair-stepping volume. That one in a fit. We need to go one at a time so we don't miss any trades here. Let's make sure we're recording. Yep. I don't know why it looks like an 80s glamour shot here. I think the camera's just dusty. I tried cleaning it off, but whatever. Wish that wick, that would have been pretty perfect if that wick hadn't been so long. See, that's in the supply demand zone. Now this broke through it. That's probably a good sign. The pattern there is good. This is crossing from within 3. So that's 1, 2, 3 criteria. But we don't have this. And we don't have a cross on those. Now, it's worth noting, this isn't prediction. Like, just because I don't take a trade doesn't mean I don't think it's going to work out necessarily. It's not about, yeah, see, coming out of these supply-demand zones, I'm thinking that might be a pretty bullish thing. But that's not part of the strategy yet, if ever. Yeah, that was in the supply-demand zone. We're not taking that. It's kind of starting to look like a double top right here. Do we have RSI divergence? No, but I bet that's going down. Maybe not, though. That's not really part of the strategy. Here we go. It's right at the line, not quite. It's still in the zone. 1, 2, 3, 4. It does have the criteria, but we're in too high of RSI. That's another disqualifier. If we're going for a short and it's high RSI, we don't take it. But I didn't say it doesn't work out. Yeah, we didn't miss one there. Alright. It's right at the line. Increasing volume. 1, 2, 3, 4. But we want the medium, low, high for this. Plus it's still in the zone. It's a really good movement though. Is that touching the middle line? Nope. This does kind of reinforce the idea though that the 4 things do work. Alright. Patience is the key. You don't have to take a bunch of trades. Overtrading is one of the deadly sins. This has got a lot of good signs, but not touching the middle line. Alright. 1, 2, 3. Not quite there. 1, 2, 3. Nope. And I bet that's going up. Yep. I said that because it looks like an ascending double bottom kind of thing. Plus we got more volume on the second one than the first. Alright. Wow. I wish this would have more decisively broke down. Didn't end up mattering. Yeah, the big wick going the wrong direction is the deadly sin there. Come on, come on. Let's get a good trade. The reason I didn't take that, too many moving averages in the way. Alright, we have touching the double. Never mind. See, this one was in the zone, that's why we didn't go with that. That was pretty close. Things were looking kind of good. I'd rather just be picky about the trades, you know? Is this one? No, not the volume. Volume's real important. I really think we don't want to be in these supply-demand zones. Sometimes it's hard to tell if we have uptrending volume. Yep. All the other stuff's not looking good enough, though. Maybe we could get in that gap. It's pretty confidently breaking out of the zone. A lot of this stuff isn't looking too bad, but not quite. Yeah, but it hits that orange line. Yup. Yeah, this did not quite match up, but the indicators were looking pretty good. Still haven't taken a trade yet. We would be entering it into here, and I'll show you once we actually get one. Like, if it seems like a lot of this is not trading, it's because a lot of it is not trading, and that the key to making money in trading is not trading very much. It's just analyzing and being careful. Let's see here. Alright, this could be something. Actually no, volume. These three are looking okay, but yeah, the other stuff, not so much. This could have been a thing, except there was the moving average in the way. It's got a lot of ranging energy going on. Yup. I don't think that's above the line. It kind of is above the line. Alright. Volume doesn't make sense. One. Okay, we only got two criteria there. It's probably gonna bounce, I bet. Yep. Alright, here we go. It's not touching the middle line. Nope. Is that touching the middle line? We're gonna say yes. Volume's the right pattern, oscillator's the right pattern, this is right, and this is right. Alright, so this moving average is going to be our stop loss. We are risking 0.72. So that's risk, time of day is 5, and this is 1/3/24. So it's only been 2 days worth of data so far. Seems like a lot, but it's really not. This is where we put the stair step. Make sure we're still recording here. This is where we put stair step, or what this is 0. Medium, low, high. We are not in the bad RSI, we are good, and sometimes you get all 5 indicators saying the same thing. We're measuring that. Alright. That's not the case this time. 1, 2, 3, 4. One more. One more. There we go. Alright, so how we do the take profit is this. We measure this, and then we measure this top line on the other side, which is 139. These don't really have to be exact figures, but that's 1 means a 1-to-1 ratio. Target is what I just measured, so 139. So basically, this is the risk to reward ratio, or it's what it is. We're normalizing for risking 1% of the account. So while this says 0.72%, which is the actual length of the candle, we're using leverage to risk 1% of the account. And what we did is we added 1.93% of the account. So that is a win. So not bad. Not bad at all. Also, there are criteria for stopping the trade in the middle. When they come up, I'll bring them up. We'll leave it as a surprise. Wow, that's a big one. You might remember at the beginning we said risk is the minimum is 0.35. This was 0.72, so that's larger. Anything less than that, we're not going to do it. Alright, that's not bad. That's definitely above that green moving average. I think this is 50. This is the 20 moving average. This is the 50, 100. I don't know. One of them's the 100, one is the 200. It doesn't really matter. At least for what we're doing. 1, 2, so that's only fitting 2 of the criteria. Let's make this a little bigger. That was also not fitting the criteria. We got like 2 supply demand zones on top of each other here. Yeah, one thing we're going to try and get a sense of is whether we should not buy when we're in the supply demand zones, because that's a new thing. That didn't meet the criteria anyway. Some of this also, like when all the moving averages are bunched up together and the supply and demand zones are kind of in there, it's an indication that you're in a ranging market. And really, this is a trending strategy, which is the opposite of ranging. That's above the line there. 1, 2, 3, 4. How we decide which of these white lines is the moving average is if more of the candle is above, like if the candle was up there, this would be the stop loss, this would be the stop loss in this case. So this needs to be 0.35 minimum, and it's not. So we're not going to take this. It looks like it's going to, I guess it didn't work out. That probably would have been a break even. We probably would have set stop loss to buy in if that had been the right size. Alright. Yep, this is good. How much is that? 20, 16. That's not big enough. 1, 2, 1, 2, 3, 4 though. Yup. There's kind of a reason you take a minimum candle size, because It's sort of a proxy for how much momentum is going on sometimes. 1, 2, nope. Yeah, didn't fit. That might. I think that top candle's too big. Okay, remember the rule here is this has to be, if this is 15, the rest of it has to be at least 4 or 5, and it's not. It needs to be a 1 to 3 ratio. I don't think that was going to fit anyway, but it's just worth noticing. Let's get out of all this stuff. Alright, well, nope. This might be good. Alright, 1, 2, 3, nope. It's a pretty good breakout. It broke above these levels, but that's not the criteria we're using. Now this is touching the middle line. 1, 2, 3, so no. We need 4. Yup. One, 2, 3. Almost crossing into the yellow, but not quite. I bet this goes up anyway, though. Apparently not. Nope. Nope. No, that didn't fit. Alright. This might be something. Oh, nope. Bounced right at that level, too. A lot of times it's about what you're not taking. Everybody wants to trade like crazy. That's just not what works. Alright, let's just get out of this. We might see that these supply-demand zones are kind of just not super worth it. I know I've used them before, though, and they were, like, useful. Come on, let's get out of this. Ranging. Has 3 criteria. This is how it goes sometimes. I wonder why the demand went away. The zone went away. 1, 2, 3. Nope. That's still stuck in the moving averages. That fit a lot of it, but 1, 2. Man, it'd be cool if it broke above that line, that purple line, suddenly. 1, 2. Nope, only 2. Sometimes it just ranges for a really long time. 1, 2. Nope. It's worth remembering that these are 15-minute candles. Each one of these represents 15 minutes. So not going through the charts at a lightning pace. That is medium, low, high. There's that, but we don't have a switch here or here, and that is not in the right place. It looked good, but did not fit the strategy. Alright. No. Nope. Not touching the middle line. Alright. This might be something. That's stair stepping. Yup. Oscillator change. Cross here. And line's been the same color. 1, 2, 3, 4. RSI is an acceptable range. It's the middle line is the stop loss. So that is... Man, this is so small. Okay. Well, let's just see if it would have worked. I wouldn't make a trade that small, but this is... Alright. So that's why we don't take the small candles. Yeah. We just gotta wait for these candles to get bigger. Maybe we should have done 30-minute charts so the candles would be larger. See, this is a different color. I don't know what that means. Alright, that's touching the middle line. Increasing volume. We got 4. Maybe we just go for it. I don't know why it changes color. We'll measure what this does at least. Technically the strategy would want this to have the volume be medium, low, high, since this isn't on the change. But we will record. So 41. This is 715, 17, 17, 24, 715. Oscillators go in the right direction. We do have stair stepping. It is not all 5. So there's some rules to how we move up the stop loss. If it reaches 4.1 or within 10% of 4.1, which would be 0.37, then stop loss goes to break even. This did not happen this time though. 6. So we lost 0.6 divided by 41. So we lost 0.15%, which is nothing. We're going to start making a running total. So we'll add this to this. Put this in the wrong spot. This is our initial amount. Running total is this plus this plus this. So we're at 178. Alright. Still recording. Good. Let's put a timer. Let's do 20 minutes more. Wait a second. What does green mean? Oh well, that wouldn't have fit anyway. This is probably not going to be a large enough candle, and it's not. Only two criteria. Nope. One, two, nope. Yeah, none of that fit. Let's make this a little bigger. That is not above the line. Man, too bad all those moving averages are in the way. It's like perfect. Yeah, we need some volatility, baby. One, two. Nope, not quite. Alright. This might be good. 1, 2. Is this the first one? Yep. 1, 2, 3, 4. So the criteria is either for the crossing is either this crosses or both, but that still counts as 1. So this is 1, 2, 3 only. So that's not good enough. Maybe it should be though. And it broke above stuff. I might reconsider that rule. Whatever. Hey, at least volatility's getting into this now. Nope. Is that touching middle line? Yep. 1. Okay. Nope. Does feel like breaking out of these supply-demand zones is kind of a good thing, though. Yeah, it's not touching the middle line. Going up, up, up. See if it crosses suddenly below the green. Nope. Not quite touching the middle line, I think. Yep, not touching middle line. The volume doesn't really make sense either, and it's too high RSI. Alright, 1, 2, 3. 1, 2, 3. Nope. Alright, 1, 2, 3. 1, 2, 3. Only 3. Alright. Let me see. 1, 2. Nope. The VWAP is in the way. The blue one is VWAP. Volume weighted average price. 1, 2. Nope. Pretty choppy. Wonder how big these candles are. We might be, yeah, at least the volatility is nice. Be cool if we just broke out of all those moving averages. We did bounce off of them. Let me shut this up. Wow, went all the way down there. Oh. Nope. Nope, nope, nope. No, none of that. That's probably a double bottom. I bet that's going to go up. Wait, was that, oh, that broke above. 1, 2. The volume's not telling the right story here. This double bottom did end up kind of working though. See? Is that below it? Nope. It's not about what you do trade, it's about what you don't trade. Oh, shit. 1, 2, 3. 1, 2, 3. That wouldn't have fit. 1, 2, 3. That's only for 1, so yeah. Wow. Some crazy stuff happening. Volume does not tell me anything useful. Supply and demand zone in the way anyway. Yep. It's a pretty confident break above the supply and demand zone. The other stuff doesn't make sense though. Really feels like this whole supply and demand zone breakout thing is real. There we go. 1, 2. Oh, bad RSI. But we will record what happens just to keep track. 5, 2. Alright. 1, 9, 20, 30. 20, 30. Oscillator going the right way. Wrong, bad RSI. That's the right volume for this. Alright, let's see what happens. So that's a no. 2. The rule is sell if you even get one candle in the wrong direction initially. And that's why we have that rule. Take a look at that. Look at how much more we would have lost rather than this tiny little 0.2, 0.02 loss. Alright, maybe we'll end it after we get one more good trade here. One, 2, 3, 4, bad RSI though. See how much the risk is. Not enough. Alright. Here we go. Come on, baby! It's actually the wrong volume pattern, but 1, 2, 3, 4. So let's see here. 1, 10, 3, 15. 1, 10, 24, 3, 15. How much are we risking here? I think the rule is if 50% of the candle is above a moving average or some area of resistance, then that's the stop loss. But it's not. Wait a second. What? 6, 7. Oh yeah. 9, 2. So this is the stop loss. 124. I didn't quite put it in the right spot there. Oscillator switch means that that's the first time it switched. We have, no, we don't have stair-stepping volume. We have the other. The RSI is in a good place. So let's see what happens here. Alright. So this is going to stop out if it touches this at this point. After the first candle is formed, this becomes like a rising stop loss, trailing stop loss. So that is almost a break even. 60, 22. So we're keeping the losses really small on this. Again, this trade wouldn't have counted. Alright, maybe we'll call it quits there. So here's what we're gonna do. We're going to put green next to the ones that would have counted. So this, the oscillator switches, I make them orange to distinguish. You want a 100 on orange, meaning a stair-stepping volume, and you want a 0 on the non-ones that's the qualifier. And bad RSI disqualifies. So I make that red. So this counts. This would count if it didn't have the other thing. So actually, the only trade that counts is the winner. So like, that's a good system. If it's only keeping the ones, and this was all decided a priori. This isn't, I'm not just looking at the trades and being like, what would have worked. So it's a good system when it isolates the only winning trade. You want a lot more data than this, but yeah, that ain't bad. So what we're going to do is I think we're going to do all the data. This is only 10 days or 7 days basically, and we're going to go through until the present, which is April of 24. So yeah, it's going to be a painstaking process, but there's a reason you do this. There's a lot of money. Alright, thanks.